Good afternoon and welcome. My name is Kara Bloomberg, and I'm the Chief Operating Officer of Landrum HR, which is the parent company of HRQ. Many of you may be familiar with HRQ, but for those of you that aren't as familiar, HRQ is a national professional services firm with an exclusive focus in the area of human capital strategy. Our consulting team brings a depth of experience in workforce planning and analytics, and you'll be privy to that this afternoon. Our team also works with clients on talent management and talent strategy projects, org design, and HR transformation needs. In addition, we provide HR on-call services, virtual learning offerings, and in high demand right now, our methodology around rapid resource optimization. Finally, we provide interim HR talent and we conduct HR searches across the country, which means we have end-to-end capabilities with regard to your people needs. In 2019, HRQ joined forces with Landrum HR in order to provide end-to-end talent solutions for clients as one of our 4 divisions. Our other divisions offer PEO services, worksite management and staffing solutions, and insurance. A few items to point out before we get started on the webinar. Please feel free to ask us some questions in the question pane in your control panel, and we'll try to get to as many of those as we can after the presentation. We also have included a handout in the handout pane that focuses on ways to engage your high potentials, and it was authored by our presenter today, Brian Wilkerson. A few words about Brian. He's held senior leadership roles in both large enterprises and global consulting firms. He is a successful entrepreneur, having founded and led a consulting and software company that was sold in 2007. He's a deep specialist in driving innovative strategies and using cutting-edge planning techniques. He's worked around the globe. Brian is a frequent invited speaker and is sought by the press for his insight. He's authored a number of articles and book chapters. All right, Brian, I think we're ready to get started. And Brian, you might be muted.
Yep, I got that. So thanks, Kara, and welcome everybody to the webinar. We're going to talk today about economics, and we're going to talk about their implications for the workforce and your talent strategy. This presentation literally gets updated every day as we get new data and as we get new analysis on the economy. So everything right now is very dynamic, and we're trying to stay ahead of that curve. I'm going to start by looking at some of the highest level economic indicators and then really dive down into a lot of the components that are most relevant to workforce and workforce strategy. To start with, I want to talk for a second about GDP. In 2019, GDP was about 19 trillion, and you can see in front of you the breakdown of that. About 70% of it is consumer spending, 18% business investment, 17% government, and then we actually import more than we export. So that's a negative number for us. But the number that I really want to focus on is this consumer number. 70% of the GDP is made up of consumer spending. I'm going to talk a little bit more about how that breaks down, but that's a really important component to think about when we're looking about at the trajectory of the economy and where things might go, and consequently what companies need to do about it. To break down GDP a little bit further, I talked about 70% consumer spending. About 9% of that is durable goods, so things like cars, furniture, large appliances. 16% of that is non-durable goods, things like clothing, food, fuel, etc. And then services make up 45%, so a very significant portion of GDP. When you look at where we are today, those components that make up 70% of our economy, durable goods and services, both are taking significant hits in the current climate. Non-durable goods, in some cases when you're talking about groceries and things like that, maybe not taking as much of a hit or going up slightly, but things like, even in that category, things like fuel are also down. So this large portion of our overall GDP is taking a very significant hit at this time from a COVID perspective. When you look at the business investment component of it, this really breaks down into things that companies buy or purchase to create new goods or things of that nature, and that's about 18% of the GDP. When you look at it in 2019, the business investment was about 3.42 trillion. That was more than double what it was back when we had our last recession, and look at in 2009. So we started to really go up since then, and business spending has continued to increase to that 3.42 trillion level. Government spending is also a really important piece of the puzzle. It was about 3.3 trillion in 2019. About 1.28 trillion of that was the federal government. That spending obviously has a multiplier effect in the economy, as government pays vendors, procures services, pays salaries, things of that nature. And we'll talk a little bit more about where that's heading in a little bit later, but that's also a very important piece of GDP. So why did I want to talk about that? Because I want to break down into some of these different areas and talk about where the trends are going and how they could impact us from an economic perspective overall. When you look at consumer spending, I'm going to show two pieces of research that McKinsey has been doing really on almost a weekly basis in terms of really understanding what consumers are thinking, what their sentiments are, where things are heading. So this first chart looks at, basically overall sentiment and what people are thinking about the economy and their spending and things of that nature. And the red highlighted piece is the one that I want to mention and want to talk about. When you look at what this chart says, about 44% of people are saying that uncertainty in the economy is preventing them from either making purchases or investments that they, would like to make or that they would otherwise make. About 52% are saying that they're cutting back on their spending, and about 58% are saying that they have to be very careful about how they spend their money. Most importantly, when you look at the increase, which is over on the right side, the first two went up by 6% in the matter of a month. So from going to the measurement, people are becoming increasingly conservative or increasingly cautious about their spending and holding back on spending. This was done in about the middle of April, and so there will be additional data coming out in the next couple of weeks. But it creates a concern when you start to look at 70% of the economy being driven by consumer activity, and this overall sentiment being fairly pessimistic or at least very careful or restrained from a standpoint of what people want to do from a consumer spending perspective. To dive into that a little bit further, this chart actually lists different categories of spending. And the question that was asked is essentially, how is your spending trending against sort of in the next 2 weeks as compared to what you would usually spend? So trying to get people to compare their level of spending activity to how they would normally act and what they would normally spend on. When you look at this, there are very few categories, and it's really groceries, household supplies, and entertainment at home that are seeing an increase. When you look at the remaining categories, every other one of them is down to some degree. 21 of the 32 categories are actually down 50% or more. So that's a massive pullback in terms of spending. And a lot of the things that people would spend around, outside the home, entertainment, goods, things of that nature are taking very significant hits, in some cases up in the 60 or 70% range in terms of the reduction in spending that people are planning over the next couple of weeks. So this data was obviously when a lot of things were still under lockdown, but it does give you an indicator of intent is still to be very cautious and to be very careful about spending. So that creates some risk from an economy perspective. When you look at some of these categories like airlines and things of that nature, there's a lot of pessimism about whether those will even return in the long term. I was listening to the United CEO the other day talking about, in recent weeks, they have often flown less people in a day than they have pilots on the payroll. And so that's a pretty startling kind of metric when you look at it. They've gotten obviously some money from the federal government and have been forced to not take any layoffs, but they're already projecting that they'll be laying off people starting in October. So, that's an industry that's an example that has a very pessimistic outlook as it's looking at what consumers' habits and business people's habits are likely to be, even once the economy starts to recover. So when you look at all of this, there are a fair number of industries and sectors that really have at least a great deal of uncertainty, if not, some outright negative kinds of outlooks going forward. So this creates a real imperative for organizations to think about how they want to deal with some of these issues. Moving on to talk a little bit about the job market. From February to March, the U.S. lost about 701,000 jobs, which is obviously a lot. You can see the trend here in the unemployment rate, and you can see those numbers pushing up. We'll actually get some new numbers tomorrow, so these are the latest that we have. Many people are predicting a 16% or higher unemployment rate when those numbers come out tomorrow. So we look, when we're trying to look at unemployment, at both the total unemployment rate, which is the one that you typically hear on the news, as well as the U6 unemployment rate. U6 adds into it basically people who are working occasionally, as well as part-time workers who want to work full-time. So we try to look at both of those numbers because they give a more full picture of what the unemployment situation is. I don't think you can turn on any news outlet or any social media outlet right now without hearing about the devastation in the job market. So I don't think a lot of this is news to people, but it's important context when you're starting to look at what your strategies might be going forward. In a similar way, when you look at unemployment insurance and initial claims around uninsurance, which we kind of look at a 4-week moving average, this was one of the numbers that was most startling to me. When you look at April 25th, the 4-week moving average was 5 million in terms of initial claims. The very highest that we got in March of 2009 was 0.66 million. So there's a lot of comparisons to, the Great Recession and those kinds of things. When you look at these numbers, they're astronomically higher than even the peak of, the Great Recession and what we experienced in 2009. These numbers are highly volatile. They change quite a bit as they go through the weeks, but you can kind of see the trend line since 2017, and it's, don't have to be a statistician to look at that peak on the end of the chart and say, we're in a very different place than we've been for quite some time. So again, important to look at from a metrics perspective. HRQ went out and surveyed a number of its clients to really try to understand what were people doing as part of their reaction and their strategies associated with COVID. When you looked at it, 94% of organizations reported that they had taken at least one action as a direct response to the COVID-19 crisis. Hiring freezes, modifying roles, and restructuring departments were the most common actions that people had taken. But you can see that there's a number of other ones in there in terms of furloughs, reductions in force, et cetera, as you looked at it. There is a small sector, about 7%, that had actually increased their hiring through the course of this. And I think we've heard a lot of stories around that in some of the e-commerce and grocery and some of those kinds of things. When you look at it, we also asked them about what they were doing in terms of their labor strategy, in-house versus contingent. About 46% of them had decreased the use of contract or contingent employees, and about 37% had maintained the same number as they go through. So more and more organizations are tending to shrink that contingent workforce, at least in the short term, and rely more on in-house employees. When you look at some of these pieces that, the work from home component was pretty obvious in terms of that, given the shelter in place orders from a lot of organizations. But, when we tried to find out how many actions that people take in, what sort of combinations of strategies were they're using, about 1/3 of the HR leaders had recorded just one action for their organization. The most common action was instituting a hiring freeze, and that was often the initial action that people had taken and the initial strategy that they were working with. When you look then at those who had taken 2 or more actions, hiring freezes and modifying employee roles were the most common actions that those organizations had taken. Modifying roles in many cases meant things like moving from full-time to part-time or other sort of modifications to roles that people were talking about. We are doing actually a series of follow-up webinars associated with some of these components, and you'll hear more about those as we go through. But something to definitely keep an eye on, because we're trying to get out as the most current information as much as possible to people to help them understand what companies are doing, how they're reacting, et cetera. From a big picture perspective, some important numbers to note. This data is very new data literally came out today. Some of this is new. 33.5 million unemployment claims filed in the 7 weeks between March 21 and May 2nd. That's 20.5% of the entire civilian labor force. So very significant numbers. The unemployment picture continues to get worse as we look at things. But even when you look at where people are from a consumer confidence perspective, in March it was 118.8. The most recent number for April is 86.9. That's a 27% drop in just the space of essentially a month span. So significant change in consumer sentiment. Consumer price index, when you look at how prices are changing, was about 2.3 in February and is down to 1.5 in March. That's a 35% drop in the course of a month. So really just a lot of chaos in the economy. And when you look at some of these numbers and understand the details behind it, it paints a tough picture in terms of where things are and where things are heading. So we try to look then at what shifts and changes and what indicators are there that we can look at to give us a long-term picture of where trends are going and help give us some predictive analytics about how the economy might go, how it might look, and how it might change. So one of the things that we look at on a regular basis is how job openings are trending, as well as how self-employment is trending. In most recessions, what we see, or any kind of economic downturn, we see a shift from corporate employment, for lack of a better term, to self-employment that happens, and that sector tends to increase. Here, as you can see by the chart, we're continuing to trend down in terms of self-employment as well. Not surprising, given a lot of the shelter in place and those kinds of orders that are out there. The trend is, oftentimes people will take shorter term self-employment, gig economy kind of jobs, contracting, even if it's things like Uber or other sorts of gig economy jobs. A lot of those just aren't available right now in terms of that, or people can't get out to work in some of those sectors. Total job openings gone down as well. We expect this number to actually continue to trend fairly sharply downwards for the next couple of periods as we look at it. But these are some of the metrics that we continue to watch to try to understand where are things going, where are things heading, what might some of the trends be. So especially as we start to look at self-employment and job openings, that'll help us continue to keep a gauge on where the overall employment market is. Couple other things that we continue to look at. So we look at commercial construction spending, we look at single family houses sold and what those look like. Oftentimes when you start to see those trend up, that will give you some indicators that the economy is starting to spark or starting to turn around, et cetera. So, these trends obviously are down right now and probably will continue to be for at least some period of time. We also look at things like, how will office space demand change? Right now, that's a big question mark, because it's not only a matter of, overall economy and hiring and things of that nature, but what are people going to do with both their workspaces and their workforce, and how are they going to reconfigure those? What are their policies going to be about people working in the office versus home? How are they going to change, distance among cubes, et cetera? May sound a little bit cynical, but we've been cramming more and more people into smaller and smaller space for a long time now, and I think that trend is going to necessarily reverse in a lot of cases, if not looking at really permanent blended workforces that rely more heavily on the remote component of work. So that's something that we're going to be looking very closely at. The other thing that we're looking closely at is government spending, and how are tax revenues trending, and what will that do to government spending. Obviously, I mentioned earlier that that's a significant portion of the economy, over $3 trillion that it contributes to the economy. The news on that front has not been good so far. When you look around the country, many cities have taken massive budget cuts. They've done furloughs, they've done layoffs, they've done all of those kinds of things. Here in Colorado, even with Denver, they looked at a 40 million in budget cuts that they want to take in the immediate term, which is more than 5% of their budget. And it's a common theme Fort Worth has seen a 30% drop in sales tax revenue, and expects to have to trim about 40% of the city's budget. Houston has taken a double hit from both the price of oil as well as COVID, and so they're looking at about a $300 million shortfall in those. So across the country, the cities and the government are taking the same kinds of hits, often taking the same kinds of actions as companies are, causing sort of a further ripple effect in the economy. We also will continue to look at those housing trends and look at sort of what do housing prices do and what can people really afford in today's market. Even access to capital and credit to refinance and to purchase homes is challenging right now, as a lot of banks have really ground to a halt in terms of a lot of their mortgage activity given the uncertainty around COVID. Lastly, from a leading indicator perspective, we tend to look at durable goods and try to understand what those orders are. Very often, it's sort of a leading indicator of increasing optimism when durable goods orders start to go up. Again, when you look at this chart to see the sort of almost straight down drop towards the end of the chart, it shows you how challenging the economy is right now. So not a lot of optimism from a business perspective right now, but it's certainly one to make sure that we keep an eye on this one and where things are heading. So now that I have painted a very rosy picture of where the economy is and where it's going, I want to talk a little bit about what should companies be doing about it, and what kinds of things should they be thinking about as they're looking at their strategies. So there's a number of categories and areas that we think organizations should be thinking about and looking at. The very first priority is to really think about what talent does the organization need for business survival, and what talent does the organization need for business recovery. There's really two concepts that it's very important that companies start to get a handle on. The first is business resilience, and how resilient is your business going to be moving forward. We could have any number of things happen from an economic perspective. Many people have talked about a second wave of the coronavirus either hitting when some of these shelter-in-place restrictions are lifted, or when the fall comes and the weather starts to turn cold again and we start to get into flu season and things of that nature. And so is your business prepared for that kind of shock that could come to the system? Similarly, from a workforce perspective, how do you create a much more flexible workforce? How do you create more flexibility in how you acquire and deploy resources from a workforce perspective? Both of those concepts are very important for companies to be thinking about. When you're looking at those concepts, it's important to be able to scenario model different strategies based on different things that could happen. In most companies, we tend to create a budget, we create a plan, a strategic plan for the year, and then we sort of make micro adjustments to that, or smaller adjustments as we go through, and then we sort of measure that at the end of the year. Organizations really need to have a much more dynamic approach to that, where they're really modeling out multiple scenarios of how the economy and how the business could go based on different factors, and then putting in place a series of sort of milestones or guideposts or things to say, this looks like the path that we're heading down, and so we need to be taking these actions and we need to be doing these things in order to respond to that. In order to really effectively respond to these scenarios, it's critical to really understand what talent does the business need just to survive. What's that bare minimum in terms of not only staffing, but the skills and competencies that people really need to have in order to keep the business going. In many cases, as people are looking at cuts or furloughs or things of that nature, they tend to do these sort of blanket approaches. Let's take 10% across the board. Let's do things like that. A lot of the data from previous recessions, previous downturns shows that that strategy really hurts the business long term, and it takes people much longer to recover, versus organizations that are very surgical about looking at key talent, understanding what's critical, what's not, and sort of basing their strategies, their cost-cutting strategies, et cetera, around that. The other piece of the puzzle, and a lot of the data that has been collected from past downturns, et cetera, says that positioning yourself for that business recovery and being ready as that starts to move is also very critical. Companies that sort of jump into the recovery wave too late tend to lag quite a bit behind those who are more proactive and have sort of better data, better predictive analytics about where things are heading. So it's important to really understand, okay, what are the things that we need to look at to know when we're moving into business recovery mode, and what talent is it that we are going to need when that happens. So those are important factors to look at when you're starting to look at that sort of overall picture of how do we survive, how do we start to move into recovery. A second component that's very important is really looking at who is your key talent. And when I say that, I differentiate it from sort of understanding what positions are important, because sometimes you may have very critical talent or people with strong skills who might not be in the most critical role or critical position in the organization. And it's really imperative for organizations to think through that sort of people versus position difference and try to understand what talent is it critical for us to keep, for us to build a relationship with, and how do we really make sure that we can retain that talent and keep that capability in the organization. Ideally, you're leveraging it in, the positions where that you most need in those critical positions as well, but it's important to really understand that critical talent. It's also important to think about ways that you can build relationships with those high potentials, with those high performers. Communication and transparency is a critical component of that in this time of COVID. People really want to be able to trust leadership. They want to trust that leadership is making the right decisions and can navigate them through this situation. So having the right communication and the right transparency is a really important foundation. But it's also important to be very specific in the relationship with these high performers and high potentials. What do I mean by that? Taking the time to communicate with them one-on-one or in smaller groups, recognizing to them that they are high potentials, that they are high performers, that they are valued in the organization. Many organizations are actually using this opportunity to engage people even more from a high potential or high performer perspective. So they're doing things like having them lead task forces or responses to COVID, or having them lead employee groups to really understand, where the employee sentiment is, how the organization needs to react, things of that nature. So getting them involved, getting them engaged in terms of the response and the adjustment to this. At the same time, giving them more and more exposure to senior leadership and helping them get a better picture of how is leadership making decisions, what kinds of considerations are they putting in place as they're thinking through the different aspects of COVID response, business direction, things of that nature. Some are even going as far as to create mentoring relationships during this time where people can, get a much more bird's eye view and one-on-one coaching around leadership response, things that people need to do, considerations, like I said earlier, in terms of how people are thinking about the business. So, a lot of companies are really taking the opportunity to better engage that key talent, creating a relationship, and again, hopefully creating more trust, more loyalty to the organization. As you're looking at talent, one of the important things to look at, and this goes back to that workforce flexibility component, is what is your mix of in-house employee talent versus contingent talent, whatever that looks like, whether that's contractors, whether that's partners. There's all kinds of modes to do that. You can see, if you look at the data since 2008, a sort of specific trend in a lot of organizations where the mix of in-house full-time versus contingent labor has shifted intentionally to emphasize a higher percentage of contingent labor. And it was really based on this idea of we want more flexibility in our workforce, and we want to be able to manage a bigger portion of our workforce on a flexible basis as our needs change. I'd be very surprised if you didn't see the same kind of trend here after we start to get through some of these COVID components, and people increasing even further the percentage of contingent labor that they really rely on from a labor strategy perspective. That's not a bad thing. You need to have the right processes in place. You need to have the right sort of things in place to make sure that you are managing that talent in an effective way, and then that they will be there when you need them and things of that nature. But having that workforce flexibility is not a bad thing. To underpin a lot of this, organizations really need to ratchet up their workforce planning and how they look at talent on a regular basis. Many companies are still in a mode of doing a workforce plan at the beginning of the year, or maybe quarterly, and sort of just tweaking that as they go through. What I'm talking about is a much more dynamic, sort of near real-time approach to workforce planning. It really needs to be as dynamic as the business planning aspect is. And similar to what the business planning folks do, you really need to look at internal indicators and external factors that are going to give you a sense of where are things going and what do we need to do to be able to be proactive, react when we need to react, and make sure that we have the right labor strategies in place, the right talent strategies in place. It's a constant, almost constant reforecasting of the workforce plan based on the data as it comes in, both that internal and external data. It's also really important that organizations have the right leading staffing indicators in place in order to really understand when do we need to take actions, what are the things that we need to do, and when do we need to do them. So when do we need to start emphasizing recruiting, or when do we need to start looking at, re-engaging some of our furloughed talent, or things of that nature. So those are all things that really need to be there from a workforce planning perspective. The environment that we're in is just too dynamic to not do it that way. And again, if organizations don't have that, then they're going to fall behind in terms of that ability to really respond to what's happening, and then as recovery starts to happen, take advantage of that. Another very systematic component that organizations really need to think through is changing their work processes and thinking about automation in a different way and trying to increase that. I think a lot of organizations have learned, in some cases the hard way, how people dependent many of their processes are, and in many cases how dependent they are in people in the same place working in close proximity in order to work. Right now, depending on what industry you're in, some of that may be unavoidable and you may not be able to do as much about that. But more and more organizations are really going to have to think about their work processes, how people collaborate, how they work together, what their workspaces look like, and how they want things to work. But they're going to have to look more at automation solutions, artificial intelligence solutions, things of that nature, to build the business resilience and have the ability to deal with these kinds of shocks as they come, not just COVID, but the next pandemic, the next sort of, global downturn, things of that nature. So that's really tied to building that business resilience. As part of that, the knowledge management component is really important, and using that term probably shows my age, but when you look at the knowledge management aspect of it, giving people access to the information they need wherever they need is more important than ever. A lot of organizations found that when sort of everybody went remote, that certain people had the information and it was much more difficult to access those people when they needed it to. There wasn't a systematic way to disseminate knowledge about customers, processes, the regulatory environment, things of that nature. And many organizations were caught off guard by how difficult it was to do things in this sort of fully virtual, fully remote environment. For a lot of people, even then, when they had sort of business contingency plans or other things of that nature, many of them hadn't really tested, well, how do those work for an extended period of time? In some cases we're going on 6 weeks, 8 weeks, or even more for some states in terms of, these stay-at-home and remote work kinds of arrangements. So investing in really rethinking those critical work processes, looking at automation, looking at your supply chain, understanding the dependencies there, is going to be really critical from a business perspective. While not all of that sits within HR's realm, it's certainly an important conversation for HR to be involved in, because understanding the human performance components of that, the workforce dynamics, reskilling, all the things that come out of these kinds of discussions is a critical role for HR to be able to play, and it's really important for HR to be involved in those conversations. Many organizations are also already or are planning to enhance their virtual infrastructure, their virtual collaboration. It's everything from understanding some of the security risks that come along with some of our remote collaboration tools, to how do we really enhance that ability to collaborate. This has been a big test for a lot of organizations in terms of their virtual infrastructure and what works and what doesn't. It's really important, as organizations are thinking about that virtual infrastructure, to think about what kind of work environment do you want to have. What do you want the culture of the organization to be? And how do you make sure that what you're creating from a virtual perspective helps you reinforce what you want to be as a company, helps you reinforce the culture that you want to have, rather than becoming a barrier or an inhibitor to, really realizing that component. So virtual information sharing is also a really important piece of that picture. With that comes security concerns. With that comes, knowledge capital and those kinds of protection concerns as well. And a lot of organizations are going to have a lot to do in terms of thinking through those implications and what is it that they need to do in terms of protecting their intellectual assets, protecting their knowledge capital as they look at those pieces. But that enhanced virtual infrastructure is also critical. Lastly, improving manager skills in key areas is also going to be really important. Things like virtual management, effective communication, et cetera, are some of the more obvious ones. But even thinking about how do managers really manage long-term relationships with talent, or what we call talent relationship management, thinking about talent the same way that we think about customers. How do we acquire the right ones? How do we create the best long-term value out of those resources? How do we really know who's out in the marketplace at a given time? And when do we really take advantage of the opportunity to potentially take talent strategically from someplace else? When you look at it, there's a lot of organizations who have an opportunity right now to strategically take key talent from their competitors. And if they're in that position from a financial perspective, but also from an understanding of who the right people are and what some of their interests are, et cetera, there's a real opportunity from a talent relationship management perspective. We've worked with organizations who are very strategic about constantly keeping a pulse on where are the people at our competitors who we would eventually want to work for us, and how do we know what some of their preferences is, what they're happy with, what they're not happy with, and how do we build a relationship with them way before we have an opening that we might want to talk to them about. Getting managers to really be able to do these things and do these things effectively is important. So there's an opportunity to invest in training around virtual management, around communication, and really help put in some of the practices around these pieces. But the managers are really in a critical role in all of this, as they often are in any kind of change or any kind of issue from a business perspective. Investing in those managers and their management skills is critical. We've been on the model of, a producing manager for many, many years. And, while that has helped us from a productivity perspective, in a lot of organizations, our management skills have gotten a bit rusty, and our ability to really work effectively with our talent, help retain them, understand when there's retention risks, really engage them, et cetera, is reduced over the years. And so this is really an opportunity and a time to help reinvest in that and make us much stronger from a talent perspective going forward. Lastly, I want to talk about contingency planning and how important it is in terms of really looking at your business and what you should be doing. And contingency planning includes the business overall, as well as your talent and your employees. Many organizations through this have really tried to take care of their employees to the degree possible. Different than what we saw in 2008 and 2009, you're seeing a lot more organizations try to find ways to keep that thread to employees, whether it's things like, using furloughs instead of layoffs or other sorts of strategies. But as we start to, and many organizations can really truly say that they were caught off guard by, what the reaction has been and what some of the restrictions have been and those kinds of things. But if a second wave does come, there's really not going to be that excuse that we can use anymore in terms of we weren't prepared or we didn't understand. So it's important that organizations think about the kinds of permanent changes that they may want to make to their work environment in order to be ready for a second wave or whatever comes down the line that really creates a shock to the system. So that contingency planning and understanding sort of what are we going to do the next time around is important, because we don't know what's going to happen. We don't know if that second wave is coming. We don't know what it's going to look like. So it's really important that organizations think that through and have that plan for the next time around. So that's a lot in terms of actions that organizations can take. And obviously, a lot of these things are going to be sensitive to the industry that you're in, the sort of economy that you're in, some of the restrictions that you have in the locations that you're managing and operating. And some of these strategies may look different from company to company, and that's perfectly fine, obviously. But when you look at the sort of key things that you should be thinking about and addressing, it's important to be comprehensive and really look at all these different areas, look at all these different components to make sure that you're really kind of covering the waterfront and covering all the things that you need to be aware of. So with that, I will stop and take questions.
Thanks, Brian. I think you hit some key points here that really struck home with some of our attendees, especially around engaging key talent. So, a couple of questions on talent. How do you keep high performers engaged and visible for the purposes of continued succession, given the workforce is now work from home?
Good question. So, I think as I talked about before, there's opportunities to put them on high visibility projects, task forces, things like that, where you're actually able to keep that visibility up because they're reporting to the senior leadership team, or they're being mentored by people there. They're getting that additional exposure. So that's a really important component there. But it's also a good time for, having the dialogue with those high performers and those high potentials about what do they want to be, where do they see their evolution, and are there opportunities during this crisis to really create those development experiences. One warning that I will say, though, is in a lot of organizations where they've reduced their workforce or done furloughs or things of that nature, the tendency then is to respread the work, and unfortunately, often the high performers and the high potentials will end up getting a disproportionate share of that because they've been, productive in the past and those kinds of things. And you have to be really careful about not burning out your high performers and your high potentials during this time. What we saw in the last recession was that as the economy started to turn around, many organizations tended to see high performers and high potentials exit first because they had opportunities and they had memories of kind of what it was like during the downturn and what their company did. And if they didn't agree with that, then they tended to look for those opportunities more quickly. And so oftentimes those were the first folks to leave, much to the detriment of organizations. So I think there's a lot of strategies that can help keep that visibility up, but being conscious about development opportunities, matching those up, because this kind of crisis does create, development opportunities for people.
Absolutely, and I think something that came out of that question, a comment on this is great about investing in talent and training, but what about when budgets are frozen? So I know you've probably heard that throughout your consulting career. We'd love to do more. It's not in the budget. What are your thoughts on that?
Oh yeah, it's a great question, and maybe I was perhaps sort of positioning it the wrong way. So when I look at it from a standpoint of training and that sort of thing, I think of it more in terms of creating development opportunities based on work that needs to be done in the organization. When I think about training around virtual management and things like that, a lot of that is things that people can do in-house with in-house resources and do that relatively inexpensively. And I think that there are some organizations that actually are investing in outside programs to help bring that in-house as well. But if you don't have the budget, I think it's looking for opportunities and work that needs to get done that matches up to people's development needs, and being much more conscious about that and being much more strategic about that. I think that there's a tendency to go to the same people in a lot of cases to get certain kinds of work done, but really looking if there's opportunities to match it up to development needs of high potentials and high performers in the organization. So yeah, absolutely recognize that there's a lot of budget constraints in terms of that, and I think it's more looking at what work needs to get done and then how can that match up to development opportunities for people, and then leveraging what you do have in-house from a training infrastructure perspective to get to that point. So it doesn't have to be huge training programs and those kinds of things, but having those sort of point interventions that can really shore up key areas from a management standpoint.
Yeah, great point. And just that additional experience that that employee may not necessarily get, and then where their area of focus, throughout their current opportunities, they can expand. So really, really good point there. So going still into measuring talent and thinking about talent, a question on, should a metric system be put in place for the sole purpose of measuring talent?
Yeah, it's an interesting question, and it's been getting a lot of attention lately as, Europe and some degree in the United States is looking at some of these, ISO certifications around talent and some of those metrics frameworks that have been created that are out there. And I think we've seen, all the way since the mid 2000s, the sort of start of the decade, an increased focus at the board level around being able to get insight into talent. And in a lot of cases, that means measures, right? I am a big believer in having a good set of metrics for talent in an organization, but I'm also a fan of making sure that those metrics are actually meaningful to your business. And so, when you look at some of the metrics frameworks that are out there, one has 26 or so different metrics that an organization should look at, quote unquote, from a standpoint of human capital metrics. When I look at those, they, a quarter of them may be relevant to any given organization, and maybe half of them to, very large organizations. So I think finding the right set of metrics for your world is important. That said, when I look at the sort of things that you should be measuring, one of them is who your key talent is and what your long-term hold on that talent is. What are the things that you have, whether it's compensation, whether it's work environment, whether it's how their interests align to what you need, really understanding what how strong a hold or affinity your long-term talent has to you. I think that's a critical piece. Understanding your employment brand and your relative employment positioning versus your competitors is very critical. It's really important to understand how well you are developing the skills that the organization needs in the future, and making sure that you have a really strong capability around reskilling and upskilling in the organization, and measuring the efforts associated with that. I think it's also really important from a financial perspective to measure how your investments in people, your non-discretionary investments in people, are creating a return. What do I mean by that? I mean, I could do a whole webinar on it, but when you look at it, it's really about, there's a certain amount that I have to pay to be competitive in the marketplace. There's a certain level of benefits that I need to offer. I need to train people to do their jobs. But above and beyond that, when I think about, for example, setting my market philosophy at the 75th percentile, what is that additional compensation investment buy me? What is the additional training investment buy me? All of those different things, and being able to measure that differential return on investment is really a powerful way to create a strong human capital strategy and human capital program in an organization. So having that slate of metrics, whether it's 4 or 5 or however many it is around talent, is absolutely critical, but they've got to be the right ones for your business. It's definitely not a one size fits all.
Following up on the talent metric system is, I think, jumped right into some questions around competencies. And, what are your thoughts about how leadership competencies may shift as a result of all the new challenges?
Well, interestingly enough, we saw that at the end of the last recession as well. The many CEOs sort of looked at their talent and said, okay, we've been developing leaders about, across all these different competencies, but yet we were woefully unprepared for what happened. And we didn't react fast enough. We weren't nimble enough. We didn't those kinds of things. And so a lot of people sort of started to critically re-examine their leadership competencies at that time. But unfortunately, I don't think it ever really went as far as it should, because when I still look at most people's leadership competencies, they're 85% the same and 15% different across organizations. I think we really need to start thinking more about complex competencies, how we start to really understand judgment, working in uncertainty, and not just sort of say, hey, we value these things, but actually start to measure them. People's ability to really read data and respond accordingly, people's ability to really engage people in tough times. I think there's a number of competencies that we haven't exercised enough, but we need to put more emphasis on. So I do think it's a good time for people to be re-examining that. And I think that we need to focus on what competencies make us more nimble, more resilient in organizations, rather than, what just make us, good leaders or popular leaders or those kinds of things. So tougher to measure, tougher to train, but more important in terms of the business's success.
Yeah, I think critical the ability from an analytics standpoint to really, as you just said, read the data and shift in a way that we've never had to shift so quickly before, and then working in uncertainty. So a lot of good points there. You mentioned adjusting a workforce plan, and I think that hit home too. Had some questions around best practices or what should we be considering when adjusting our workforce plan.
Again, there's a lot to it. I think that making sure that it's very dynamic, as I mentioned, is really important. But when I look at it, being able to look at your workforce in terms of skills rather than positions is really critical. If you can actually look at the workforce in terms of the skills that they have rather than just sort of thinking about them in a particular position, it gives you much more flexibility and much more ability to react and respond and do things differently in terms of structure, staffing, things of that nature. Many organizations have not gone down that path because you feel like it's too complex or whatever it is, but the power that it buys you in terms of really being able to understand options from a workforce perspective is immeasurable in terms of the positive impact that it can have. In addition, predictive analytics becomes an even more important component in a time like this. Being able to have metrics that give you early warning of what's happening, what's coming, and what you should do about it is, again, absolutely critical. And a lot of organizations have started down that path, but it really has to be accelerated. It really has to be emphasized more, because they're the things that are going to, position you better than the rest of your industry or the rest of your competitors in terms of both response and recovery. So I think, those are two real imperatives. I think the third is that frankly, many organizations just are underpowered in terms of their staffing around workforce planning, and making sure that whoever they have doing workforce planning really has the critical skills that are necessary to do that. And those are much more advanced kind of modeling and those sorts of skills. So finding ways to make sure you have that right talent in that space is also important. I get less concerned about what systems people have and things of that nature. Systems certainly help, but it's more important to have the right algorithms, the right analytics, the right approaches. And then finally, I think it's also critical that leadership be bought into what are the right metrics for us to be looking at, and that those metrics be very tied into not only sort of business results, but whatever your business development process is. So when you look at it, part of the predictive analytics component is being able to look at the business development or the sort of sales funnel, and being able to tie that back into what you need to do from a talent and metrics perspective, talent metrics perspective. So I think those are the critical components in terms of really upgrading workforce planning and changing how we do it.
Yeah, so great answer. And I know we're going to expand on that. I wanted to mention to everyone that a recording of this webinar is going to be available to everyone that registered. We got a few questions on that. And we're actually have a second webinar in our series, Leading Through Disruption, that's going to focus specifically, Brian, on what you just mentioned with workforce adjustments. So that webinar is Thursday the 14th. At 11 a.m. Mountain Time, and you can go to our website, hrqinc.com, for more information. The session is going to offer a deeper dive into how organizations can optimize their existing resources, organizational design to support current processes, and grow, structure, or restructure your workforce to meet the post-COVID-19 objectives and priorities. And it's a quick 30 minutes, so we'll put a lot of put a lot of great content into a quick 30 minutes there. Brian, thanks so much. Any kind of closing thoughts here as we wind down on the webinar?
I think it's just, it's a very challenging environment out there. I think we all know that, we all see that, but it's also really an important time in terms of rethinking the way that work gets done in organizations and how we, approach our work environment, our work processes, et cetera. So, taking advantage of the opportunity to really make sustainable improvements in the workplace and how we do things. I think there is an opportunity there that could come out of this crisis. We'll be continuing to do webinars like this, economic updates, and then consequent sort of updates to strategy and what people should be doing as part of it.
Yeah, I'm glad you mentioned that. We had some questions around how frequently we'd be updating this data and what's our plan on sharing it out. So certainly once a quarter and getting a webinar together every quarter, that will lead into additional leadership series.
Yeah, well, we basically do a monthly update of the data. And so for those of you who are already on some of HRQ's mailing lists, you may be getting those monthly updates, but you can certainly contact HRQ if you're not. And then we will be doing quarterly webinars to give kind of a more big picture, comprehensive update.
All right, well, I appreciate everyone's time that stayed for the hour with us. And on behalf of HRQ and Landrum HR, thank you so much for joining us today. There'll be a survey as we close out the webinar, and we'd love for you to participate. Thanks so much, Brian.